Wall Street ended Friday's session sharply higher despite Labor Department data showing 20.5 million out of work, with unemployment rate at 14.7%, the worst since the Great Depression. The figures underscore the depth of the impact of the COVID-19 pandemic on the U.S. economy. The S&P 500 index gained 1.7% to end the session at 2,929.80. For the week, the index ended by 3.5% higher. The U.S. stock market powered through grim economic data to close Friday out with the best weekly gain in about a month. Thus, the Dow Jones Industrial Average rose by 1.9% on Friday to close at 24,331.32. For the week, the Dow advanced by 2.6%. According to market observers, investors' reaction was optimistic as historical job losses showed they were slightly fewer than feared. The headline number was better than some estimates for 22 million newly unemployed. Meanwhile, the NASDAQ Composite Index advanced by 1.6% to end at 9,121.32. For the week, the tech-heavy index posted a 6% gain. A broader measure of unemployment that includes discouraged job seekers and other people on the fringes of the labor market skyrocketed to a record 22.8%. Although the government did not keep records back then, economic historians estimate unemployment peaked at 25% in 1933. Despite the fact that the pandemic has the potential to create economic conditions that are as bad or worse than the Great Depression, the steps that the Federal Reserve Bank has already taken, coupled with the stimulus that Washington is also providing, are the main reason why the U.S. is unlikely to re-experience that terrible time in the world history, analysts say. Among stocks in focus, Uber Technologies reported first-quarter results that revealed weakness in its ride-hailing business, but a surge in its food delivery segment. The company's stock ended Friday's session by 6% higher at 32.79. For the past week, it posted a 15.5% gain. The rally was sparked after the company noted it began to see evidence of a mild rebound in its ride-sharing business, with week-on-week growth in many regions around the world. Still, the company posted a staggering first-quarter loss of $2.9 billion, or $1.70 per share. The massive loss came on revenue of $3.5 billion, an increase of 14% versus the same period a year ago. Analysts had been forecasting the company to lose 90 cents per share on revenue of $3.35 billion. The trend reversed this week, and Uber Technology stock was trading in the red on Monday. Meanwhile, Apple's shares were also among stocks in the green last week. The tech giant shares closed at 310.13 on Friday, posting a 2.1% rise for the day and a 7.2% gain for the week. Apple had initially guided for fiscal first-quarter revenue between $63 billion and $67 billion. But when the coronavirus led to production constraints and store closures in China, the tech company told investors its revenue was expected to come in below its guidance range for the period. And it did exactly that, coming in at $58.3 billion. Nevertheless, Apple's fiscal second-quarter results still managed to highlight why its stock is worth buying. Apple shares continue trading in the uptrend to start this week. This was the weekly financial review on Insta TV with me, Anna Kasatkina. Thank you for watching and see you back soon.